Mic check, mic check. Good morning, everybody. Good morning. Good to see you guys here. I hope you are doing well. We are about to get the stream started. It is FOMC Day, the biggest FOMC of 2025. Live coverage and live market analysis reaction here. Stay tuned. What is going on, Deadwood? Abolish government. Green fingers in the house. I see you guys in the chat, man. Thank you guys for showing up today. Let's go. Thank you guys for being here. Thank you for smashing that like button and subscribing to the channel. We will be covering minute by minute the FOMC today and the Bitcoin and Ethereum and altcoin price action reaction to the FOMC press conference and rate cut. Stream will begin soon, guys. Thank you again for being here. Do not go anywhere. Stay tuned. Just making some final adjustments here as Bitcoin is moving. What's going on, Alexandra G? OG in the chat. Thank you for being here and showing up. I appreciate you. Larry Barber, what's going on? Thank you for being here. Are you guys ready for the biggest and most important FOMC decision of 2025? ATL guy, what is going on? And I apologize, man. Streamlabs is on a tear again. I'm gonna have to time out Streamlabs. Come on, Streamlabs. Guys, smash the like on the way in. It helps greatly. I do appreciate it. Joe, I seen you over on GEC last night. What is GEC? Give me just a second here, guys. Mic quality okay. We're going to give this time to make sure this stream quality is intact and we will not lose connection here. If you do appreciate the live coverage and market analysis coming up, be sure and hit the like button and subscribe to the channel if you're new here. We would love to have you a part of our community. Huh, I'll have to look into that, man. Good evening, Crypto Show. Thank you guys for being patient with me here, guys. I do appreciate it very much. I do appreciate it. Give me 1 second. Everything's looking good to go today for this major event as we await the infamous Jerome Powell and the Fed rate cut decision. Don't forget to answer the poll in the chat and let us know what you think will happen today. All right, who is ready? I need to know if you are ready to start this stream or not. If you are ready, I am ready. But I need to know, are you ready? What's going on, Clipsy333? Welcome to the stream. Thank you for being here, bro. Todd BTC King back in the house. Welcome back, my friend. Good to see you back. How will the market react after the meeting's first 5 minutes? All right, here we go. Let's see if we can find that answer, Clipsy. Guys, run the chat up if you're ready to start the stream. Ollie oi oi says I panic sold already. Oh no, Ollie. Are you ready to start the stream, Ollie? Let's go. Let's go. All right, guys, buckle in. It's going to be a wild ride today. It's going to be a very wild ride, right? We got some massive volatility ahead, and we're going to be taking a look at it minute by minute on the minute chart. We're going to watch the candles fly. We're going to watch the candles fly as Jerome Powell seals our fate, Ollie. What is going on, Sir Reese? Welcome to the stream, you guys, and thank you for tuning in here live with AJC for today's FOMC meeting. And let's get it started. Welcome back, guys. Thank you for being here. I truly appreciate it. Today's a big day, so welcome to the stream. I really appreciate you tuning in here for your FOMC live coverage. It is FOMC decision day, the biggest one of 2025, and the markets are bracing for impact. We are now minutes away. Well, I say minutes away. Eastern time from the Federal Reserve's rate announcement. So today could be one of the most important Fed meetings of the entire year. A rate cut is expected. A lot of numbers are in the air. My personal opinion, 25 basis points. What do you guys think? Let us know in the poll in the chat. But the real question is, what kind of shock is coming from the guidance going into 2026, which I actually uploaded a video right before going live today, this morning, about this. So we're really talking on Powell's tone during the FOMC press conference. A lot of the rate cut projections have already been priced into the market. So we're looking at his tone on the new economic projections going into 2026, inflation outlook, and the 2026 interest rate path. There's talks of only one interest rate cut in 2026 or none. All the stuff that can whip the markets in seconds, and it can whip our behinds too. So we need to really pay attention to his tone when he's speaking, and we'll be talking about it in the chat. We'll be engaging, but we'll also be watching the candles move as he is speaking as well. So don't go anywhere, because you're going to want to stay tuned here for your live FOMC coverage, as we will tune into the market's reaction live minute by minute. Let me know your opinion in the chat. We will look at Bitcoin. We will look at Ethereum, altcoins. We'll take a look at potential trade setups even. Let me know if you guys are trading in the chat. What are you trading on FOMC day? Or do you trade FOMC day? Hawkish 2026 financial hidden wealth already printed. Todd BTC. 2 pre-rolled green figures. Ready and lifted. Bitcoin and ETH open longs right now, Todd. Let's go. So everything is on the edge right now, and the volatility could be massive. We're going to break it down, the top news from today, go over what analysts are expecting. We'll react live to the official Fed statement as it unfolds, and of course, I'll give you my real-time crypto and market analysis that you're here for. So whether Powell goes dovish or drops a hawkish bomb, we are going to be ready for it. Make sure you smash that like button early so more people find the stream, and drop in the chat, do you think the Fed cuts rates today by 25 basis points or by 50 basis points? Or does Powell throw a curveball? Let's see where you guys stand before it begins, and let's see where the charts are at and what they're speaking to us before the press conference begins. Remember, the rate cut decisions announcement will come before the press conference. I will make sure that I am up to date on this. As soon as that is announced, we will announce it, and then of course tune into the press conference. $40x long on Solana ATL guy. Let's get it. Bitcoin 25x long and a 20x long on ETH. You guys are longing pre-FOMC drop. I love it. I love it, bro. I love it. Now, let's talk about Bitcoin real quick. Welcome back, Deadwood, my guy. Now, let's talk about Bitcoin's potential here, because where we're at, we are in limbo here, right? We're in limbo. It's the end of the year. we have the most bullish macro developments taking place in crypto history. We have a massive outlook for catalyst in 2026 that should be bullish. Correct me in the chat if I'm wrong. Should be bullish, right? But look at the price action. Where are we at right now? Now you guys are long. You guys are long, and I don't blame you for being long right here. The problem is the resistance, the wall that Bitcoin must get through. But could this actually be the beginning of, hear me out, an actual super cycle? The super cycle, the hyper adoption phase of crypto and Bitcoin. Hear me out, bro. Oh, my bad for that being so loud, bro. I don't know if that was loud for you guys, but thank you for hitting the subscribe button. Who's going to be next to join the AJC crew, baby? I will turn the volume down on that, though. I apologize. That was loud. I mean, it exploded in my eardrums. But thank you for subscribing. I think that was a subscribe. I don't know. Woo! That was so loud in my eardrums. I hope that you guys, I hope it wasn't that loud. But, whew. Kashi Folly. I appreciate the subscribe. Whew. Anyways, where was I at? Turn it up, Ollie. Turn it up. We have ridiculous bullish catalyst. It's unreal what we should be expecting. It's unreal. When we look at the charts, this is what I was talking about, the super cycle, the actual super cycle, the hyper adoption phase that I spoke of years ago. I spoke of what I called, I talked about this in 2021, and some of you guys remember that there would come a time when we would see the hyper adoption phase of Bitcoin. And by hyper adoption, I mean Bitcoin, blockchain, cryptocurrency adopted so quickly that we won't be able to keep up. And we already can't, right? It's already happening so fast. There's new headlines every single day. There's new developments every single day. There's new things happening, new things growing, new things being created, new things being developed constantly. And it's only going to increase as this hyper adoption phase continues. And we're here for it. We're here and present for it. And I spoke about this years ago when Bitcoin was still very low. Because I knew, just like most of you knew, when you learned about Bitcoin, when the Bitcoin price was back at $3,500 for me. Some of you may have been around the market when it was lower than that. You know, I can only imagine seeing Bitcoin at $100 and something. But where we're at now is unreal and unbelievable. And going into 2026, we have some of the most bullish things coming. So tell me, do we trust what we feel in the market when we look at this chart? Because tell me what you feel. Tell me what you feel when you see this chart. Tell me if this chart makes sense to you. Green Finger's in no shorts right now, and that's a sign, guys. If you're new here to this channel, if Green Fingers is in no short positions right now, then that's a good sign. That's a good sign for those of you that are bulls in the chat. Now, are you bullish or are you bearish? That's a good question. That's a good poll for the chat. Are you bullish or are you bearish? We got to turn the tunes up a little bit as we await Jerome Powell, because, you know, we gotta have the vibes right for this. Okay, I'm not gonna lie, man. I almost thought about it. I almost thought about getting a bottle and everything. I mean, at this point, how else do we prepare for these moments, man? The volatility. How do we prepare for that? You know, how else do you guys control your emotions? I'm just kidding. Don't drink. That's the worst thing you can do to control your emotions. It does the opposite. Now let's talk about a $1 million Bitcoin for a second. I just want to talk about it. You don't have to agree with me. You don't have to agree with anything I'm talking about here. Draco Hard said 420 basis points. Run the chat up, guys. Run it up. You don't have to believe in a $1 million Bitcoin. You didn't have to believe in a $100,000 Bitcoin, right? But you know what? There's some of us that did. There's a lot of us that did. And just like anything in life, if you speak it and believe it with certainty, if you speak it and believe it with power and passion in your soul, and if enough of us do it, I believe it manifests into reality no matter what. And then whether that's magic or whether it's just a collective consciousness, I believe the powers that be know this, and I believe that's how they keep the masses under control. Now, I probably shouldn't talk about that, but why not as we await Jerome Powell? Why not? As we await the waffle, Green Fingers would say. Waffles are on sale today. But the powers that be, I believe, know this. And they use that to control the masses through manipulative ways, such as media, music, whatever it might be. And I do 100% believe it works. And if they can push a narrative enough, and enough people believe that narrative with enough fear, see, that's the thing, that emotion, the fear. That's why they have to instill the fear. That's why they have to drive the fear into us. Because that fear and that emotion is that power that I spoke of. That power. That's what gives those thoughts the ability to manifest. And that is the emotion. So they instill the fear into us to push a narrative. The biggest one we already know about. And it happens so much. And it's going to continue to happen until we collectively stop it from happening. What is going on, you guys? In the chat. Sorry, we are going off over here as we await the Fed rate decision. Thank you guys for being here, and thank you for commenting and engaging in the chat, man. I welcome your questions. I welcome to speak to you about whatever it is. We can talk about whatever as we await the Fed press conference. I will go into the charts more as we get closer to the Fed press conference. Right now, Bitcoin steady at 92,000. 1 minute time frame. We are. Did I cut out there for a sec? There it goes again, guys. I don't know why it happens every single dang time, bro. It's like, I don't know. What happens? Never heard truer words. Joe Havenpeck, what is good? I appreciate you. You get it. You get it. A lot of you understand. Tahaja, what's going on, man? Ava Medina. Welcome, channel members, by the way. Thank you for being a member of the channel and supporting the community here. I appreciate you. If you are new to the channel, consider hitting that subscribe button and joining us here on AJC. We love crypto. We got some real crypto OGs in the chat. Crypto traders, investors, many people, like-minded individuals. Let's grow. And if you enjoy the vibe, make sure you subscribe, because then you'll want to tune into our regular live streams for sure, especially the late night ones. ATL guy, I seen you earlier over in Sam Price in the Crypto Lifers stream. Look at this. We got 45 votes already, 46 votes already on the poll in the chat. And look at this. The 50 basis points is actually ticking up at 26%. Let's see how many votes. Let's see if we can at least get up to 100 votes on this poll in the chat, this stream. And maybe more than that. Last FOMC coverage we did, we had thousands of votes. So we'll see how this goes. And we'll see where the people stand here. What do you guys think? Remember, the statement comes out ahead of the conference, so we will know what the interest rate decision is before the conference. Okay, but we still want to stay tuned to the conference because that might be even more important than the rate decision. As we all know, the markets move when Powell speaks. Depending on what the press asks him, we're going to watch these candles live, minute by minute bounce, baby. What's going on, Local 420? Long time no see. Good to have an old school in the chat, by the way. All of you guys, by the way. I mean, we are making our way. You know what I'm saying? Making our way. The AJC squad is making its way. And guys, those of you that remember from the past, I just want to say one thing. The plan is still the plan. Okay? The plan is still the plan. Now, my timing may not be perfect, but the plan is still the plan. 48 votes on the poll currently. And if you are joining the stream and viewing right now, could you hit the like button? Let's see how many of you guys can hit it right now. 2 seconds, 3 seconds, 4 seconds, 5 seconds. How long does it take to do it? Can you show a little love for us in our live FOMC coverage? Tap that like and hit the subscribe before I drop an AJC vibe. Sorry, this beat got me for a second. I appreciate it. I see you. I see you tapping. Tap, tap, tap. We're already at 21 likes. I think we can pass 100 likes this FOMC stream. Last one got almost 500. Let's do this, guys. Let's do this. Let's run it up. Let's run it up. Just like we want Powell to run it up, man. I will talk about it. I want to get on here and just tell you guys that it's going to pump, right? That it's going to pump to the moon. And I do have the moon up here. I do have the moon. And there's a really good reason why this is here, right? There's a really good reason why. Ooh, that's kind of scary when it flips. Inverse moon. But there's a good reason why this target is in there. It's a simple technical analysis pattern and a measure move. Now, the real question is, let me double check here. The real question is, $65K or $135K? Now we're on the daily time frame, so this move would only take a few. This would only take weeks. This wouldn't take very long. Now, the measured move for the $1 million price target, for the 1 million. I always feel weird saying that, but you know what? It kind of felt weird saying 100K back in the day. It really, sounded weird to other people. The no coiners and I mean, people that aren't into crypto. Oh man, that was weird. Trying to tell them that this magic internet money coin is going to go from $1,200 to $100,000. I tell you what, that was a good time to be able to, say, look, history has proven that I'm right. How many of you guys have gotten to do that? Did you get to enjoy that? History has proven I was right. It's not very often that history proves you right, Okay, hold on. Hold on. I will say, there is a buy signal here on the daily, by the way. And I'm only saying this because these buy signals actually, if you can see, they actually aren't bad. They are not bad on the daily time frame. Now, other time frames, this signal, this indicator might not be as good, but if you're tuning in here, you're new here to the channel, then you know that when I do my analysis, I use this indicator a lot. I don't usually put the signals on, but in this case, I think it might be telling us something here. Now, this buy signal led to a very good run. This buy signal led to a very good run. The question is, are we somewhere more like this one? Look at this, right? Look, are we somewhere more like this buy signal where I don't want to be that guy, you know? I don't want to be that guy, but sometimes you have to be that guy, right? Now, I do think this buy signal is good. Just like this one was good. Nice run. This one was good. Chop, 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 chop. Nice run. Now, I do feel like this buy signal is in the price action area more similar to something like this. Now, you know, I even impress myself sometimes with the just when you keep it simple, when you just keep it simple. So what do we do here? Because if this is the end, then I believe it would play out almost identically to back here, right? On the indicator, with the indicator being red right here. It's just like with it being red right here. Same thing, right? We bounced up slightly above it. Bear market. Couldn't stay above the 200-day moving average. Could not stay above the 200-day moving average. Got rejected right there. Now, our 200-day moving average currently is right at the psychological $100,000 wall of resistance for Bitcoin. So the Bitcoin price needs to break 100 to 110K and maintain daily candle closes on that support. Otherwise, the exact same thing that happened here, I think, would happen here. Now, there's another scenario. There's a few different scenarios that we can think about here, but the price levels to hold and break are key. And if Bitcoin rallies from here, there's something that you can notice here on the daily time frame with my indicator that I have in, and the green and the red, right? You can notice we are pretty, this indicator came out pretty wide right there. And if we look, usually that leads to a bounce, but it doesn't always mean a reversal, right? It does not always mean a reversal. So when do we actually get the reversal? Well, let's see. Let's look at our MACD real quick. Let's look at the daily MACD. Crossed here. MACD cross. LSMA cross. Bounced on the LSMA above the 50-day, We are above the 50-day moving average. And if we invert this chart, this would look like a top. We're rounding out here. So let's see, levels to pay attention to. I truly believe somewhere around 95, 96 here. But we can't rule out. We cannot rule out the 200-day moving average being tested. Right? We cannot rule that out. We are getting very close, guys. Very close. Now, real quick, what are we doing here on the 4-hour Bitcoin chart? This might give us a clue to that move to the upside, you know? We have a nice ascending triangle here, or ascending wedge. Now, we could look at this a couple different ways. I know you could look at it. I know there's those of you that might look at this different. You know, you might just say that it's a nasty bear flag. I'll go ahead and put this in for the bears. Okay? Because if it is a bear flag for the bears, keeping it simple, man. If it is a bear flag, then the target would make sense. $68,000 to $70,000 would be the measured move there. And that lines up right with, oh my goodness, bro. Okay, so the measured move of the bear flag lines up perfectly with not only previous all-time high, the bear flag also lines up perfectly with this previous resistance and these previous highs. I mean, perfectly. 69,000. That's the measured move of the potential bear flag on the daily 4-hour time frames. And it lines up perfectly. Don't forget to smash the like. But that came out of nowhere. That was just hiding down there, wasn't it? I swear I didn't plan that. What do you guys think about this bear flag? Bear flag or ascending triangle? It's like, it depends. Are you a bull or a bear? You know? Are you a bull or a bear? Because you can look, you've seen analysts and a lot of analysts, we have our way of, dictating what we see in the price action in the charts. And although this could be, I'm not ruling out that it could be a bear flag. I'm not ruling that out because the 69K target does line up perfectly. It makes a lot of sense. Now, I still want to talk about the fact that it could be an ascending wedge with a measured move target that would put us our right shoulder in for our head and shoulders on the daily, right? Because if we broke out of this and we climbed up here, hit that target, you know, we got a little, and we didn't hold that 100K support that I mentioned earlier that was so critical. Oh, well, then we might just come on down. And put in that nice chode that does not go like this. It goes like this. Anyways, we're not going to discuss that. But that's why it's so key to me to hold and maintain support at 100K. We got to get past 100K. I know there's the 92K levels. We've talked, there's a lot of talk of price levels, 92K, 94K. But I think the real price level is 100K. We've got to see Bitcoin price hold 100K and not get rejected there, because that is a psychological sell wall for all of those that missed it, right? Those that feel like they missed it. Why is it telling me my audio stream bitrate is 0? Can you guys hear me okay? Is it because I'm not playing music? That's strange. But, you know, for those that missed the chance to sell at 100K, this will be the opportunity. So a lot of people that, you know, believe in the theory that this is a bear market, where we are already in a bear market, a lot of these people are going to sell at 100K if they didn't get the chance to when we dropped and lost 100K. So, and 100K is right here. 100 to 110, I've said it before, is going to be key. We need to get up here and hold this level. Hold that level. And preferably, we need to hold even more critical support, which is this, our bull market channel, right? Our bull market, you know, since 2023, you know, our 2-year channel. We need to get back up into that. Now, where is that price at? The same exact price level. It's the same exact price level. We need to get above the channel support line. So we need to get above 110. 105 to 110 is right here. 105, 110K. That's the ultimate level to go to. That is where Bitcoin needs to go to invalidate a bear market. I don't know why does it say when I don't have my microphone, something's up. I know you guys can hear me okay, but something's weird about my microphone, and as soon as I started playing music, the little message on YouTube went away. I assume that you guys can hear me, right? Okay, yes, good. Where is the chat, bro? Where is the chat? YouTube lying to you. They might be. We now have 53 votes on the poll in the chat. The 50 basis points rate cut. The 50 basis points is still trying to creep up, but it looks like we're still steady at 25. I believe most of us are pretty much locked in on the 25 basis point rate cut. We are still awaiting Jerome Powell. We are awaiting the FOMC press conference, and we're awaiting the official release of the Fed rate cut decision statement. So once that is announced, we will jump into it and jump into the charts as well to see how Bitcoin reacts. As of right now, ETH 33.77, and you know, ETH is looking kind of good right now. I think ETH is warning 35. But remember, I told you guys prior, and I told you in my video from this morning, 3,500 is still not enough, in my opinion. 3,500 is still not enough, in my opinion. And as always, not financial advice. Please read the disclaimer. I mean, you know, we have to do it. Now, I feel even more inclined to do it, you know, when, you know, we're talking about some really crazy price predictions, right? When we are talking about Bitcoin going to $1 million, right? Invest, trade, hodl at your own risk. Invest, trade, hodl at your own risk. ETH is really pushing here, and remember, 3,500 is not enough for Ethereum. Ethereum has got to get above 3,500. Ethereum needs to hold 3,800 because 3,500 could be resistance here if we do not break above it and hold at the 50-day moving, or 50-week, 50-week moving average and previous uptrend support here. All right, guys, we are still awaiting Jerome Powell. The man himself, the man, the myth, the legend is on the way. On the way. I promise he will not be as late as Trump. He will not be as late as Trump usually is, right? What is up, Ogati? What's going on, Ogati? To the moon, man. What's up, Ogati 300? It's not Joe's fault. It's not Joe's fault. Not this Joe, anyways, right? Not this Joe. Guys, Jerome Powell is coming. We are patiently awaiting the FOMC, and we will cover it live here. I expect it to be ridiculous, right? I expect it to be ridiculous here. ETH is already pushing ahead of the FOMC. ETH is at 3,300. Almost 3,400 here, pushing towards 3,500 at the 50-week moving average. 30 minutes till the slaughterhouse begins. The butchering of the bulls. Are we going to get a pump? Is Powell going to finally give us an alt season? Are we finally going to get an alt season, people? Bro. ETH put. I'm telling you, something ain't right with it. The mic cut out again, bro. The mic cut out again. All right, ETH, there goes 3,400. ETH breaking out right now. ETH breaking out. Let me get this. Let me get these signals off here. Oh, man. I seen this one coming, too. Ow. Already coming. ETH on the move, 3,400 and rising. Critical support could be reclaimed here soon. Thank you guys for joining us. Wow, ETH, go ETH, baby. Come on, man. Pushing that 3,500. That's that level I mentioned earlier. Remember, 3,500 is the 50-week moving average for Ethereum. So 3,500 needs to break. We cannot stall at 3,500. Now, this is leading into the FOMC press conference today, right? This is leading into the FOMC live, and that is coming up very soon. Very soon. So we have to be cautious and expect the volatility. It's not here yet, as you can see, but we will see it. We will see it. This is the calm before the storm. The calm before the storm. Can we get the Bitcoin pump that we have all been waiting for? Can FOMC decision day decide the fate of Bitcoin? ETH at 34.28, getting rejected here on the 30-minute. Drop it down here. Drop it down, drop it down, drop it down. Got hit right there. Will she push? Can the FOMC rate cut decision and Powell's tone towards 2026 save Dogecoin from falling here as it has every time it's come to the 50-day moving average? Every time it's hit the 50-day moving average 3 times. 4th time's the charm, right? Dogecoin has hit it 3 times in a row and got rejected each time. Well, twice, I say. We did get rejected, but we did not come all the way down yet here on that. So I'm going to get rid of that because we might be getting ready to see Doge pump here and reclaim high above 15, 16 cents here. If it can break the 50-day moving average on this interest rate decision day. We're at 25 likes. Let's get it to 30. I think we can get it there very quickly. I really appreciate you guys being here. I've had this chart in for a couple of weeks, few weeks, and, you know, expecting a pump here. Been expecting a bounce off of this for Bitcoin, but also expecting rejection. So we just have to wait and see. Can we avoid that? Can we invalidate this? Can this be the ultimate bear trap of 2025 for Bitcoin? Let's go. I see Haven Peck, Deadwood, Green Fingers, Todd, BTC King, Ogati in the chat. I see you guys and I appreciate you guys very much. Thank you for being here. If you're viewing the stream, drop a comment and let me know you're here in the chat. Let me know. Let me know. Almost to that 30 like goal. Kennedy, man, I appreciate it. Thank you for being a subscriber. Thank you for hitting that subscribe button. I don't know why the alert box didn't pop up here. Should have. I turned the volume down. I didn't turn it off. Abolish is still here. My guy. Oh, gosh. There it is. It's still really loud. Why is it so loud in my headphones? Oh. Thank you for subscribing. Let me turn that down again. Where is that at? Whew. There we go. Now I can turn it down. Okay. Oh. What is happening right now? What is happening? Why is it making that noise? That is not supposed to be my... It's not supposed to be my alert box noise. Sky Lee, what is good, bro? Sky Lee and the crew. Sky Lee, one of the AJC crew. What's up, man? Good to see you. Bro, I don't know what's going on with that. That was double loud noises. 30 likes. We hit it. Did we? We hit 30 likes, man. We're gonna have to put a new like goal, man. The Don Killum is back. What is good, bro? Welcome back. Good to see you back here again. Let's go, guys. Down 10K. Oof. Ooh. You think it's going to win, Sky Lee? Brendan, get to our what is going on, man. Here I am again. One more FOMC. Cheers from Brazil. Good to see you, Brendan. I assume you were with us in our last FOMC coverage. Just want to say that I do appreciate each and every one of you guys showing up to today's stream and our live coverage of today's FOMC. The Fed rate cut decision will move the markets, so stay tuned as we will be diving in minute by minute on the time frames in the charts, taking a look at what Bitcoin and Ethereum in the market does after the FOMC. I do appreciate you being here with us. I think you may have just found your tribe, if you know what I'm saying. Brad Garlinghouse and Ripple humbled Gary Gensler's SEC, and now we're heading towards legal crypto clarity on the back of Paul Atkins. Crypto can't be stopped at this point. Oh Gotti, could it ever have been stopped? Could crypto ever have been stopped? Brendan said, absolutely found your channel last FOMC, man. That's what's up, Brendan. And I appreciate you showing back up today for the FOMC here with us again, man. That says something, right? That says something, and that means a lot to me. So I appreciate you, bro. Thank you guys for tuning in here for the live FOMC coverage. We will be covering it step by step here as we await Jerome Powell. Now, the release of the interest rate cut decision, that statement will be released very shortly here, guys. Within the next 10 minutes, the statement will be released on the Federal Reserve decision on rate cuts. Now, while we already kind of know what's going to happen there, the more important thing is going to be the press conference and what we talked about earlier. Powell's tone going into 2026, what his outlook is into the next year in Q1. And now, while most of us are grounded, it is very easy to get caught up in the hype, the bullish momentum on social media right now. It's almost a little disturbing because, you know, I do want us to stay grounded here. I don't want us to get too ahead of ourselves before the volatility settles, right? But I would love to know what you guys are doing in the chat. And if you're trading this or not, you let me know. I would love to know. Me personally, I have no open trades right now. If you want to trade with me, you can trade with me on BYDFi, or we just recently partnered with BTCC Exchange. Guys, you can now actually claim up to 15%. Actually, it is stable at 15% bonus on your first time deposit. That link is in the description. And this is a brand new partnership with BTCC, a well-known crypto exchange. And, you know, I really love the professionalism of the exchange. I really love the user interface so far. And I have really not gotten to dive real deep into BTCC yet, but I plan to, and I plan to give you guys my opinion and my input on their exchange. I do hope that you guys take advantage of a 15% bonus, right? Trade with it. Trade at your own risk, but trade with it. Right around the holidays, it could come in handy. You know what I'm saying? And then, of course, if you want to trade on other exchanges, no KYC exchanges, I have a list of our partners in the description. BYDFi, WEEX, YUBIT, and BTCC now. So, guys, as I am partnered with multiple exchanges, please, I do this because I know that some exchanges are not available in certain areas, and including in the US. But I also know that me personally, I prefer a no KYC exchange. And I know a lot of you guys do too. And so that's why I am happy to be partnered with BTCC. And I hope that you guys can maximize your profits with this 15% bonus on your first time deposit. Currently, BYDFi is offering a Christmas campaign. We are doing the 12 days of Christmas with BYDFi, and you have until the 22nd of this month, guys. Right before Christmas hits, you have the 20th till the 22nd to sign up for BYDFi using my link and get up to a $1,000 deposit bonus. Link in the description. Also, guys, don't forget to follow me on X as well. Thank you guys again for being here. Let's get back to it. What Hassett as a potential Fed chair would mean for interest rates. Now, this is an old article, but I just want to point out that Kevin Hassett is the lead candidate to be nominated for the next federal chair position, and he is pro-crypto, as we all know, as most of you should know. So, as many would say, giga bullish, right? Giga bullish. Now, Polymarket's odds have just skyrocketed. Polymarket's odds have skyrocketed. In 2 minutes, can we keep the chart on the screen? Yeah. In 2 minutes? Why 2 minutes, Green Fingers? You know, it's just crazy how the odds have completely just skyrocketed on that 25 basis point. Now, the 50 basis points odds just has dumped, right? But we've pretty much got the 25 basis points rate cut priced in, locked in. It's what Powell says, what he's asked by the press. His tone going into 2026, it's really going to move these candles, bro. Let's see. Here we go. Cut the rates and print the money, pal. QE! Can we get the QE in the chat? Make PAL small window so we can keep an eye on the chart. I for sure will. I will for sure make sure we're keeping an eye on the prize. I will be sure of that. We passed the 30 like goal, so we got a new like goal, guys. Can we get the stream to 50 likes? I greatly appreciate you guys. And I have the faith. I have the faith. As we await Jerome Powell and the FOMC, let's take a look at these, at the Ethereum and Bitcoin side by side here. As ETH just hit some resistance at that 3,400 level. Bitcoin at 93. We now have almost 100 votes in the poll in the chat. Remember earlier we only had 25 votes. I was like, let's get it to about 100 votes on the poll and then see what the odds look like and what we are expecting here in our community and then in the chat. And it looks like we've got 83 votes now on the poll in the chat. And the 50 basis points odds are creeping up. I kind of like it. I kind of like it. But it's locked in. Seems like we're locked in at the 25 basis points. Thank you guys for tuning in here live as we await the FOMC press conference. The volatility is spiking, and the pumps and the dumps you will get to see here live. Now, we will not miss a beat. We knew the number would come, right? The number at 1 or 2 p.m. your time, right? And let's go ahead. And then the press conference is coming up next. Here is the official statement. Available indicators suggest that economic activity has been expanding at a moderate pace, job gains have slowed this year, and the unemployment rate has edged up through September. More recent indicators are consistent with these developments. Inflation has moved up since earlier in the year and remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. Uncertainty about the economic outlook remains elevated. Economic uncertainty remains elevated. The committee is attentive to the risk to both sides of its dual mandate and judges that downside risk to employment rose in recent months. In support of its goals and in light of the shift in the balance of risk, the committee decided to lower the target range of the federal funds rate by 1/4 percentage point to 3.5 to 3 3/4%. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risk. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. So we got the expected 25 basis point cut. And the volatility spiked. Look at the volatility. Look at the volatility. Infinite Dream Lab, what is going on? Thank you for being here. Thank you guys for tuning into the stream. Please don't forget to smash the like button. We're trying to get to 50 likes as we await Jerome Powell and the press conference. Breaking, Bitcoin price reacts to Fed's latest rate cut. Bitcoin briefly spiked above 93,000 in response to the Federal Reserve's decision to cut the benchmark interest rate by 25 basis points. And it immediately dumped. Now, what happens next is key. Thank you guys for tuning in. Don't forget to smash the like and subscribe to the channel. If you are new here to AJC, we would love to have you on board with the AJC crew. Kennedy says volatility first. Let it settle. Let it settle. Again, thank you for tuning in here live. We will keep an eye on the charts and an eye on Powell. Pretty soon, we might be saying Hassett. Let's refresh. I cannot. Okay, this is live now. So this will begin as soon as as it begins, it will automatically start playing and we will know. Market reaction. The most important FOMC of the year. And like I said earlier, guys, the rate cut was already so expected and priced in that we really want to focus more so what is said during the FOMC press conference coming up. So stay tuned. In just a few moments, we will tune into Jerome Powell live. Infinite Dream Lab, let's make some money. Here we go, guys. I need to know where you guys stand. What is your opinion right now? What is your opinion right now? Haven Peck says Pingu has yet to see his shadow. Todd, you got to sell on ETH at 4K. Evening Digest here just popped up. Fed rate cut loading, China's Nvidia chip push, and Bitcoin rebound driving the market mood. Bitcoin at 92,700 currently. As we await Jerome Powell, I'm going to step away really quickly, guys, for just a quick, short break. I'm going to leave Bitcoin and ETH up, and we still have a few more minutes before the press conference begins. I just need to step away. I have to go drain the lizard, you know? I'll be right back. Excuse me. Excuse me. Okay. All right, guys. All right, guys. All right. All right. FOMC press conference beginning any moment now, any minute. Infinite Dream Lab, yes, bro. I mean, you're not kidding. 3,400 is a wall as of right now. As long as Jerome Powell's not as late as Trump, bro. Trump was an hour late. I give the man credit. He's got a lot to do, but you know, you're making an important appearance, man, an hour late. Jerome Powell is never late. You know? Powell is never late. So as we await Papa Gooth, welcome back to the channel, my man. Good to see you as well. And you know, that's a good question. That's a good question because Trump mentioned that in Pennsylvania. You know, I haven't dug into that one yet. There went my microphone again, bro. I don't know. I don't know, man. I don't understand why it does that. Did you guys notice anything? Any weird feedback? My mic, my whole sound just cut out. I gotta upgrade this, bro. I've already upgraded everything else, man. Like, if I could show you guys what I'm working with over here, you would think that I am like, you would think I have 100,000 subscribers, you know? Good job. Good. Okay. Good. Bro. Good deal, Deadwood. Good deal, Papa Gooth. Papa Gooth. Papa Gooth. My mic is just stoned. Probably. Probably. Guys, if you're viewing the stream right now, drop a comment, man. I see you in there. I see you in there, but we don't know if you're alive or not. So you gotta let us know, man. You gotta let us know. Are you rocking with us this FOMC live stream? Are you really rocking with us? I gotta know. I gotta know. Are you truly rocking with us? 25 basis point rate cut confirmed. FOMC press conference beginning in literally minutes. Did you just tell me to shush? Who did that? Wait, is that delayed? What is going on here? Let's go, Raporte. Count me in. I don't know what I said, man. What did I say? Oh, thank you for being here. All right, guys. Look, we got almost 30 votes on the new poll in the chat, and it looks like people are already expecting Bitcoin to pump. Count me in's trying to sell everything. I guess you voted Bitcoin dumps on the poll in the chat. You're part of the 10%. You know, it's crazy, man. Do we go with the odds? If we get over 100 votes on the poll and it's still Bitcoin pumps, do we trust that? Do we trust that? Guys, literally 5 minutes. 5 minutes until Jerome Powell. 5 minutes until Jerome Powell is live. Most important press conference of the year. My lunch depends on this, Brendan. I feel that. I feel that. My lunch depends on this. Being late can also be a sign. What is going on, Astrid? Thank you for joining the stream. Come on, pal. Come on, pal. Pump the bags, pal. Pump them bags, man. Let's talk dovish on 2026. Are you dovish? Are you hawkish? Dovish chat, hawkish chat. Free pal. Free pal. All right, guys, so we should have a live feed here shortly. We should have the live feed here in about 1 minute. A couple of minutes or so, we should have the live feed. And here we go with the live feed now. And there went my mic again, bro. I'm telling you. All right, guys, we got Powell stepping up live now.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and that job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a quarter percentage point. With today's decision, we have lowered our policy rate 3/4 of a percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance since September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement, or repo operations, are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Howard.
Thank you. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustments since September bring our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now, too. So it is, it's partly that consumer spending has held up. It's been resilient. And to another degree, it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the SEP median is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Thank you.
Steve.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking, is the risk management phase of rate cuts over here, and have you taken out sufficient insurance, I guess, against potential weakness in terms of the data we might get next week when it comes to employment?
So we're going to get a great deal of data between now and the January meeting, and I'm sure we'll talk more about that. And the data that we get are going to factor into our thinking. But yes, we have, if you go back, we held our policy rate at 5.4% for more than a year because inflation was high very high, and unemployment and the labor market was really solid at that point. So what happened is over last summer of 24, inflation came down, and the labor market began to show real signs of weakness. And so we decided, as our framework tells us to do, that when the risks to the two goals become more equal, you should move from a stance that favors really dealing with one of them, in that case inflation, to a more balanced, more neutral setting. And so we did that. We did some cutting, and then we paused for a while to work our way through what was happening in the middle of the year. And then we resumed cuts in September, and we've cut now 3. We've now cut a total of 175 basis points. And as I mentioned, we feel like where we're positioned now we're well positioned to wait and see how the economy evolves from here.
If I could just follow up on the SEP, you have a whole lot of big increase in the growth numbers, but not a big decline in the unemployment numbers. And is that an AI factor in there? What is going on in terms of the dynamic of you get more growth, but you don't get a whole lot of decline in unemployment? Thank you, sir.
So the implication is obviously higher productivity. And some of that may be AI. It just also, I think, productivity has just been almost structurally higher for several years now. So if you start thinking of it as 2% per year, you can sustain higher growth without more job creation. Of course, higher productivity is also what enables incomes to rise over long periods of time. So it's basically a good thing. But that's certainly the implication.
Still think that something's
Thank you,
up with
Colby
the
Smith
stream.
with the New York Times.
We're not showing
Today's
up
decision
on,
was clearly very divided.
any
It wasn't
search
just the two
results,
official
guys.
dissents
Crazy.
against the cut, but there were also soft dissents from 4
How do we go from getting 44,000
others.
views
And I'm
on
just
the last
wondering if
FOMC?
this reluctance from several people to support recent reductions suggests that there is a much higher bar for cuts in the near term. And what exactly does the committee need to see if things are well positioned right now to support a January reduction?
Sure. So let me just say, as I mentioned, and as I've mentioned here before, the situation is that our two goals are a bit in tension, right? So interestingly, everyone around the table at the FOMC agrees that inflation is too high and that we want it to come down, and agrees that the labor market has softened and that there's further risk. Everyone agrees on that. Where the difference is how do you weight those risks, and what does your forecast look like, and where do you, ultimately where do you think the bigger risk is, and it's very unusual to have persistent tension between the two parts of the mandate, and when you do, this is what you see, and I think it's actually what you would expect to see, and we do see it. Meanwhile, the discussions we have are as good as any we've had in my 14 years at the Fed. They're very thoughtful, respectful, and you just have people who have strong views, and we come together and we reach a place where we can make a decision. We made a decision today. We had 9 out of 12 supported it, so fairly broad support. But it's not like the normal situation where everyone agrees on the direction and what to do. It's more spread out, and I think that's only inherent in the situation. In terms of what it would take, we all have an outlook in terms of what's going to come, but I think ultimately having cut 75 and the effects of the 75 basis points will only begin to be coming in. As I've said before a couple times, we're well positioned to wait to see how the economy evolves. We'll just have to see. And we will get, as you know, quite a bit of data. I should mention on the data, as long as I'm talking about it, that we're going to need to be careful in assessing, particularly the household survey data. There are very technical reasons about the way data are collected in some of these measures, both in inflation and in labor, in the labor market, so that the data may be distorted and not just sort of more volatile, but distorted, and that's really because data was not collected in October and half of November. So we're going to get data, but we're going to have to look at it carefully and with a somewhat skeptical eye by the time of the January meeting. Notwithstanding that, we will have a lot of the December data by the time of the January meeting. So we expect to see a lot more, but I'm just saying that what we get for example, CPI or for the household survey we're going to look at that really carefully and understand that it may be distorted by very technical factors.
And just one more question on dissents. I mean, you talk about it in a very positive way, just given the complicated nature of the situation we're in economically. But is there any point in which those dissents become counterproductive, either to the Fed's communication and the messaging around the policy path forward?
I don't feel that we're at that point at all. I don't. I would say, again, these are good, thoughtful, respectful discussions, and you hear people say, and you hear many outside analysts say the same thing. I could make a case for either side. I mean, I could make that case. It's a close call. We have to make decisions. And we always hope that the data will give us a clear read, but in this situation, you have competing. If you look through the SEP, you'll see that a very large number of participants agree that risks are to the upside for unemployment and to the upside for inflation. So what do? You've got one tool. You can't do two things at once. So at what pace do you move? What size moves do you make, and that kind of thing? And what's the timing of them? It's a very challenging situation. I think we're in a good place to, as I mentioned, to wait and see how the economy evolves.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, there's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy of where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3, is not a big data set. But you are right about those 2 3-cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the, notwithstanding the 150 basis points in cuts prior to today?
So I think the idea is that with now having cut 75 basis points more now and having policy, I'd call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Claire.
Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a foggy situation, we slow down, to mean that, there wouldn't be a cut now, there'd be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought. In terms of inflation, it's come in a touch lower, and I think the evidence is kind of growing that what's happening here is services inflation coming down, and that's offset by increases in goods, and that goods inflation is entirely in sectors where there are tariffs. So that does build on the story, and so far it's only a story, that that the goods inflation, which is really the source of the excess at this point, almost more than half the source of the excess inflation is goods, is tariffs. And you've got to say then, so what do we expect from tariffs? And I would say that is to some extent down to looking for broader economic heat. Do we see a hot economy? Do we see constraints? Do we see what's going on with wages? You saw the ECI report today. It doesn't feel like a hot economy that wants to generate, Phillips curve kind of inflation. So we look at all those things, and we say that this was a decision to make. It obviously wasn't unanimous, but overall that was the judgment that we made, and that's the action we took.
And just on the ample reserves point, how concerned were people around the table about some of the tensions we've seen in money markets? Thank you.
I wouldn't say concerned. So what really happened is this. Balance sheet shrinkage, sometimes called QT, went on. We had a framework in place for monitoring it, and nothing happened. The overnight reverse repo facility went down pretty much close to zero. And then beginning in September, the federal funds rate started to tick up within the range, right? And it ticked up almost all the way to interest-on reserve balances. There's nothing wrong with that. What that's telling you is that we're actually in an ample reserves regime. So, we knew this was going to come. When it finally did come, it came a little quicker than expected, but we were absolutely there to take the actions that we said we would take. So, and those actions are today. So, we announced that we're resuming reserve management purchases. That is completely separate from monetary policy. It's just we need to keep an ample supply of reserves out there. Why so big? The answer to that is, if you look ahead, you'll see that April 15th is coming up, and our framework is such that we want to have ample reserves even at times when reserves are at a low level temporarily. So that's what happens on tax day. People pay a lot of money to the government, reserves drop sharply and temporarily. So this seasonal buildup that we'll see in the next few months was going to happen anyway. It was going to happen because April 15th is April 15th. There's also a secular ongoing growth of the balance sheet. We have to keep reserves, call it constant, as it relates to the banking system or to the whole economy. And that alone calls for us to increase about $20–25 billion per month. So that's a small part. That's going on. It's also happening in the context of a temporary few-month front loading to get reserves high enough to get through the tax period in mid-April. So that's what's happening there.
Andrew.
Thanks, Mr. Chairman. This is the last post-FOMC press conference before an important Supreme Court hearing next month. Can you talk about how you're hoping the Supreme Court will rule? And I'm just curious why the Fed's been so reticent on such a pivotal matter.
It's not something I want to address here, Andrew. We're not legal commentators. It's before the courts, and we think we don't think that we help matters by trying to engage as a public discussant of that. I'll give you a mulligan, though.
No, thanks. I don't know if that means I get 3 questions, but
No, just one more.
I guess I wanted to come back to the 1990s question, and like, do you see that as a useful model for thinking about what is happening in the economy right now?
I don't think it rises to that level. So I did think that in 2019, where we cut 3 times, but this is such a unique situation. It's not the 1970s, let's put it that way, but we do have tension between our 2 goals. And so that's just unique in my time at the Fed, and I think going back a long ways, we haven't had that. In our framework, as you know, says that when that's the case, that we try to, take a balanced approach to the 2 things, and we look at how far they are and how long it would take to get them back to each of them back to the goal. And that's a very subjective analysis, really. But it just tells you you've got to, and I think ultimately what it says is when they're broadly equally threatened or equally at risk, you should be kind of neutral. Because if you're either accommodative or tight, you're favoring one or the other goal. And so we've been sort of moving in the direction of neutral. Now we're in the range of neutral. We're in the high end of the range of neutral, I would say, and that's what we're doing now. It so happened that we've cut 3 times. That we haven't made any decision about January, but as I've said, we think we're well positioned to wait and see how the economy performs.
Edward.
Thanks, Mr. Chairman. Edward Lawrence with Fox Business. I wanted to ask you, the inflation expectations has come down in your SEP report. Do you see the tariff price increases as passing through in the next 3 months? Is it a 6-month process that we're looking for that to end? And then because of that, is jobs the threat to the economy?
So with tariff inflation, there's the announcement of a tariff, and then they start to take effect, and then it takes some months. Goods may have to be shipped from other parts of it may take, quite a while for an individual tariff to take its full effect. But once it's had that effect, then the question is, isn't that just a one-time price increase? So we actually look at it, all of the announcements and what you get from all that. You see sort of for each one of them, there's a time period, and then it's fully in. So if there are no new tariff announcements, and we don't know that, but let's assume there are no major new tariff announcements, inflation from goods should peak in the first quarter or so, right, or roughly. We haven't been able to predict this with any precision. No one is. But call it the first quarter or so of next year should be the peak. And from here, it shouldn't be big. It should be a couple tenths or even less than that. We don't really have precision on this. And after that, again, if there are no new tariffs that are being announced that will take 9 months to get fully in, and 9 months is also an estimate, then you should start to see that coming down in the back half of next year.
And I want to see if I could address sort of the elephant in the room. The president's been talking openly about a new Fed chairman. Does that hinder your current job right now or change your thinking at all?
No.
Mike.
No mulligans for it. Michael McKee from Bloomberg Radio and Television. 10-year rates are 50 basis points higher than when you started cutting back in September of 2024, and the yield curve basically has been steepening. Why do you think that continuing to cut now, especially in the absence of data, is going to bring down the yield on the thing that will move the economy the most?
So we're looking at the
poll
real
in
economy
the chat,
and focusing
man.
on
Where
that.
are you guys
You've
at?
got to-
The
when
poll in the
when
chat.
long
Nothing
bonds
burger
move
is
around,
only
you've
at
got to look why
15%.
they're moving around. If you look at inflation compensation, it's very
Nothing burger is
that's
only at
one part of it
15%.
is inflation compensation break-evens, and they're at very comfortable levels. They're at levels consistent once you get out past the very short term now. Break-evens are at at quite levels that are quite consistent with 2% inflation over time. So there's nothing happening with rates going up out there that suggests concern about inflation in the long term or anything like that. I mean, I look at these things pretty regularly. Same thing with surveys. Surveys are all saying that the public understands our commitment to 2% and expects us to get back there. So why are rates going up? It has to be something else. It must be, an expectation of higher growth or something like that. And that's a lot of what's been going on. I mean, you saw a big move, toward the end of last year, which was not to do with us. It was to do with other developments.
Well, you just mentioned that the public is expecting you to get back to 2%, and Americans overwhelmingly are citing high prices, inflation, as their number one concern. Can you explain to them why you're prioritizing the labor market, which seems relatively stable to most people, instead of their number one concern, inflation?
So we, as you know, we have a network of contacts in the U.S. economy, which is really unmatched if you go through the 12 reserve banks. So we hear loud and clear how people are experiencing really costs. It's really high costs. And a lot of that is not the current rate of inflation. A lot of that is just embedded higher cost due to higher inflation in 2022 and 23. So that's what's going on. And so the best thing we can do is restore inflation to its 2% goal, and our policy is intended to do that, but also have a strong economy where real wages are going up, where people are getting jobs and earning money, and we're going to need to have some years where real compensation is higher, it's positive, significantly positive, so nominal wages are higher than inflation, for people to start feeling good about the affordability issue. And, so we're working hard on that. We're trying to keep inflation under control, but also support the labor market and strong wages so that people are earning enough money and feeling economically healthy again.
Victoria.
Hi, Victoria Guida with Politico. Just to follow up on that, I mean, this is now the third time that you've cut this year, and inflation is around 3%. So is the message that you're sort of trying to send with that you're okay with where inflation is for now, as long as people understand that at some point you still want to get back to 2% because inflation is relatively stable where it is?
Everyone should understand, and the surveys show that they do, that we're committed to 2% inflation, and we will deliver 2% inflation. But it's a complicated, unusual, difficult situation where the labor market is also under pressure, where job creation may actually be negative. Now, supply of workers has also gone way down, so the unemployment rate hasn't moved that much. But, it's a labor market that seems to have significant downside risks. People care a lot about that. That's their jobs. That's their ability, if they get laid off or if they're entering the labor force, to find work. So that's really important to people. The story with inflation, and we're well aware that this is a story at this point, is that if you get away from tariffs, inflation is in the low 2s, right? So it's really tariffs that's causing most of the inflation overshoot. And we do think of those as likely to, in the current situation, as likely to be a one-time price increase. Our job is to make sure that it is, and we will do that job. But right now, you've got this difficult balance, and there are risks to both sides. There's no risk-free path. If it was just inflation and the labor market was just really strong, and then rates would be higher, as they were for more than a year. We didn't have to worry about inflation. Sorry, about the labor market, because the labor market unemployment was very low. If you remember, when inflation was very high, there was a labor shortage, so we could focus entirely on inflation. Now it's different. We actually have risks to both, and I think we're doing the best we can for people. They also care about their jobs. They do care about affordability, and the best thing we can do there is both to support economic activity, but also, make sure that when tariff inflation goes down and disappears, inflation lands around 2%.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Just to follow up, you keep talking about job growth being negative. Why do you think job growth is so much worse than some of the official data? Why do you think job growth is, to follow up on your comments about job growth, why is it so much worse than the official data is suggesting?
Oh, well, we know, I think I don't think this is particularly controversial. It's very difficult to estimate job growth in real time. They don't count everybody. They have a survey. And there's been something of a systematic overcount. And so we expected, and they correct it twice a year. So the last time they corrected it, we thought the correction would be 800,000 or 900,000. I won't get the numbers exactly right. And that was exactly what happened. So we think that has persisted. And So there's an overcount in the payroll job numbers, we think, continuing, and it will be corrected. I don't have the exact month in my head right now, and that's just, again, I think forecasters generally understand that. So, and we think it's about 60,000 a month, so 40,000 jobs could be negative 20. And, that could be wrong by 10 or 20 in either direction. But in any case, but the thing is, that's job creation in a way, that's demand. Labor supply has also come down quite sharply. So, if you had a world where there's just no growth in workers and you really don't need a lot of jobs to have full employment, some people argue that's what we're looking at. But I think a world where job creation is negative, I just think we need to watch that situation very carefully and be in a position where we're not, pushing down on job creation with our policy.
When we're talking about supply, we have seen major American employers like Amazon cite AI in job cuts. How much right now are you factoring in AI into the current weakness in the job market?
So it's probably part of the story.
There's something wrong.
It's not a big part of the story yet.
With the live stream.
We don't know whether
it's
it
not
will be.
Doing right.
But for example, if you look at, you can't miss the big announcements of layoffs and also companies saying that they're not going to hire anybody for a long time, and they cite AI. That's all clearly happening. At the same time, people are not filing for unemployment insurance, and since job creation, job finding rates are extremely low, if there were big numbers of layoffs, you'd expect the continuing claims to go up, and you expect new claims to go up. It really haven't much, so it's a little bit curious. But longer term, though, the question is, what are we going to see here? And we don't know, but it's it may be that in past technology,
my
really
microphone's glitched out like 5 times this stream, and last stream it didn't glitch out at all.
You have seen some jobs destroyed and other jobs
weird
made.
Stuff.
Ultimately, what's happened for a couple hundred years is when you get through all that, you have higher productivity and you have new jobs, and there are enough jobs for people. This may be different.
Some live streams.
Every time we have a wave of technology, we think, this could put a lot of people out of work. What are they going to do?
Our last FOMC stream
in the past, there's always been more work and higher productivity, and incomes
This
have risen.
stream's been okay. It's not. I'm not complaining. It's a good stream,
but right now is such early days. We don't think
know
we
if
see
I did something wrong.
It's certainly not showing up in layoffs yet.
I think what happened last time is I restarted the stream
Thank you,
right
Chair.
before Powell went live.
Bloomberg News, given the breadth of views on the policy committee,
I think is what I did.
Why is there such a division of views between
on the policy what?
On the committee.
I'm pretty sure.
Thank you.
Why is there such a division of views between the presidents and the board members?
I need to go back and watch it.
It's not so stark as that. The views are more varied on in each group as well. There's some of that, but I would say they're also governors and they're people on both sides in both groups. I wouldn't put too much in that.
Okay, and just to follow up, please, given your growth upgrade, how would you factor in, or what would be the economic impact if the Supreme Court is to strike down the tariffs that they're currently hearing, please, in terms of growth and inflation? Thank you.
I really don't know. It would depend. It would depend on a whole bunch of things we don't know. So I can't really help you there.
Christine. Thank you.
Thank you, Chair Powell. Christine Romans, NBC News. I wanted to ask you about how the higher income households are really driving spending right now. They're backed by home equity and stock market wealth, but lower income consumers are really struggling with the accumulation of 5 years now of rising prices. It's price levels, not really the inflation rate, holding some of these families back. How sustainable is this so-called K-shaped economy, and what are the Fed's thoughts on whether that's a risk going forward?
So we do, through our vast network of contacts and just through our observation of what's going on in the economy, we hear about this a lot. If you listen to the earnings reports for consumer-facing companies that tend to deal with low and moderate income people, they'll all say that we're seeing people, tightening their belts, changing products that they buy, buying less, and that sort of thing. And so it's clearly a thing. It's also clearly a thing that, asset values, housing values, and securities values are high, and they tend to be owned by people more at the higher end of the income and wealth. So as how sustainable it is, I don't know. Most of the consumption does happen by people who have more means. I think, the top third accounts for way more than a third of the consumption, for example. So it's a good question how sustainable that is. The best we can do is to have a, price stability and a strong labor market. And what we saw, for example, what we saw at the end of the very, very long expansion that ended with the outbreak of the pandemic, we saw that it was 10 years and 8 months or something like that, the longest one in recorded history. In the last 2 years, most of the largest part of the wage gains were going to people in the bottom quartile, the bottom part of the low and moderate income. So, having a strong labor market for a long period of time is really, really good from a social standpoint. It's helping people at the lower income levels, and that's what we all want to get back to. But we got to have price stability, and we got to have full employment, maximum employment.
And just quickly, you mentioned the housing market remains kind of weak. With these rate cuts that we've seen, is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation? I mean, the average age or median age of a first-time home buyer is now 40 years old. That's the highest on record. Yeah,
so the housing market faces some really significant challenges. And I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people. Housing supply is low. Many people have very, very low rate mortgages from the pandemic period, and they kept refinancing and got the really low. So it's made it expensive for them to move. And we're a ways away from that changing. Also, we haven't built enough housing in the country for a long time, and so a lot of estimates suggest that we just need more housing of different kinds. So housing is going to be a problem, and really the tools to address it are we can raise and lower interest rates, but we don't really have the tools to address a secular housing shortage, a structural housing shortage.
Chris.
Thanks. Chris Rugaber, Associated Press. You mentioned on inflation, services inflation being low, goods inflation looking like maybe it'll peak. We had the wages report you mentioned today showing moderating wage growth. Where are the inflation risks? It looks like inflation is cooling, in your view. At the same time, you have potentially negative hiring. Why not? Why aren't we hearing more about maybe more cuts in this environment?
Well, I think the risk in inflation is pretty clear to see, and that is, we see higher inflation. As I mentioned, most of the inflation over target is from goods, and we estimate, we expect, most of us, that inflation will be a one-time price increase and then come down. We just came off an experience where inflation turned out to be much more persistent than anyone had expected. Is that going to happen now? So that's the risk. The risk is either that tariff inflation just turns out to be more and more persistent, maybe because companies who are now holding back from passing through the tariffs will just keep doing that. So you see that. I think the other possibility is less likely, and that is just that the labor market gets tight or the economy gets tight, and you see just traditional inflation. I don't see that as particularly likely. But so I think again all across the committee, people see the picture pretty similarly, but see the risks quite differently. And some people do see the inflation risk, and I wouldn't dismiss that case. I don't dismiss that case, but you've got to make an assessment, and this is the assessment we made.
Hi, Chair Powell. Neil Irwin with Axios. So this has come up a couple of times today, but to be clear, do you believe that we're experiencing a positive productivity shock, whether from AI or policy factors or whatever? And how much is that driving the higher GDP projection in the SEP?
So yeah, I mean, I never thought I would see a time when we had 5-6 years of 2% productivity growth. This is higher. This is definitely higher, and it was before. I also think if you look at what AI
Microphone
can do,
just
and if
cut
you
out
use
again.
it in your personal life, as I imagine many of us have, you can see the prospects for productivity. I think it makes people who use it more productive. It may make other people have to find other jobs, though. So it could have productivity implications while also having, social and labor market implications that we don't have the tools to deal with. But yes, I think we're definitely seeing higher productivity. I think it's a little quick to be saying it's generative AI, but I don't know. The pandemic may have induced people to do more automation and do more things with computers to replace people, and that raises productivity, output per hour.
Does that imply a higher neutral rate, and therefore the policy might be a little easier than it seems?
All things equal, yes, but all things aren't equal. There are many things pushing in different directions on where the neutral rate would be. But yes, that argument does come up.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. After today, you only have 3 more meetings at the helm of the Fed. Since becoming Fed chair, you've seen multiple trade wars, the pandemic, COVID reopening, period of high inflation. I know your term's not up as chair until May, but I'm wondering if you've given any thought to what you want your legacy to be.
My legacy. My thought is that I really want to turn this job over to whoever replaces me with the economy in really good shape. That's what I want to do. I want inflation to be under control, coming back down to 2%, and I want the labor market to be strong. That's what I want. And all of my efforts are to get to that place. They have been all along, but ultimately, that's what I'm. And it's I don't have time to think about bigger things. I hope many years ahead to worry about that, but there's enough to do.
Relatedly, have you given any more thought, and can you tell us any more about your plans on whether or not you plan to stay on the Fed Board of Governors even after your term as chair expires?
Again, I'm focused on my remaining time as chair. I haven't got anything new on that to tell you.
Go to Mark for the last question.
Chairman Mark Hamrick with Bankrate. Even while many price levels remain elevated, the reductions in the federal funds rate means that savings rates, or yields to be more precise, have peaked while key borrowing rates remain elevated. And that's, as we've discussed here, as many Americans struggle with liquidity or emergency savings challenges. Is that just collateral damage or an unintended consequence because your tools are limited in addressing individual or household liquidity constraints, insufficient money in the bank?
I don't know. I wouldn't agree that that's collateral damage of our. I mean, over time, we do what we do in order to create price stability and maximum employment, and those things are hugely valuable to all the people we serve. When we raise rates to bring inflation down, that does work by slowing the economy, but we've moved back our policy back down to where it's certainly not strongly restrictive at this point. I think it's sort of in the range of neutral. So that's what we're trying to do, and I would want people to understand that. I think what people are feeling is the effect of higher prices. There was a global wave. Sort of every large economy in the world, sort of every large open economy, market-based economy in the world had a wave of inflation that looked an awful lot like ours. We actually came through better than any other country, substantially better. We had higher growth, we had better labor market, and this is really due to the American economy. We have an extraordinary economy, and people are innovative, they work hard, and so all of us who work in economics jobs are really fortunate to have the U.S. economy. So, thank you very much.
All right, guys, there it was, man. That was it. And it was poor guy. He's getting tired of this, It was kind of as expected, Kind of as expected, and markets kind of reacted as expected. We got a nice volatile wick, right, nice volatile move up and down right here, and then market has moved up. Big wick right here on ETH. Look at that. What the hell, bro? 32.50, man. Beautiful. Beautiful. We wicked to 32.50, and I have a trend line there at 32.50. Where is that? That is oh, bro. That's why we wicked to 32.50 right there. Oh, that's a good sign. Look. ETH reclaimed that, and that is long term. That is that long-term uptrend support that we are back in now. Look at that. Back up within the pattern. Bear trap action right here. Bear trap action. And I got Streamlabs in here. I got a timeout Streamlabs. Bear trap action right there. I mean, honestly, where ETH is at right now is testing the 200-day moving average. We have bounced all the way back to the 200-day moving average. ETH needs to break that, though, really. But that wick and that bounce off of that support right there, that is big. There's a reason. That's a good sign. There's a reason that there was such a massive bounce off of that trend line. That's long-term support that we just bounced on ETH. And then look, you bounced again here, 33.30. Bounced beautifully again there. So you're above the previous high. New high on the 15-minute. Getting some spicy wicks here on the hourly. Look at that. Look at those volatile wicks on the hourly. Rounded bottom still on the 4-hour, breaking out to the upside, coming up on resistance though. 3,500. Definitely. XRP didn't move. All right, guys. So remember our chart here. Remember our chart right here. Look at that wick, though. Look at that hourly wick on Bitcoin at 94,500 and coming down. Can it blast? Can it blast through here on this rounded bottom? Let's go, Todd. Gosh, another 3-hour live stream, guys. Pal really sent us on a big run, huh? I don't know what I did differently this time, but I did something differently this time. Stream is still a success no matter what. I really appreciate every one of you guys that have showed up today. And I still, honestly, my opinion, guys, I believe that the market has room to still go up. I just believe that unless we break through certain thresholds, it's going to be a short-lived rally. I still believe that unless we maintain support, we got to break some key levels. Otherwise, we can make some money. We gonna make money. No, if you're trading it, you can make it up and down. But and something just ain't right, bro. Look, it's telling me that there's no sound right now on the stream either. I don't know, bro. Anyways, weird crap, man. Every time, bro. It's like I do like an update or I do one little thing different and something like throws everything off. I don't know. It's weird. But I do appreciate you guys. Stay cautious out there, man. Stay cautious out there. And I am running on like 0 caffeine and like nothing. I woke up because obviously I was up late last night with you guys. And I freaking woke up this morning. I hadn't had coffee. I ain't had nothing, man. It's crazy. So yeah, I'm feeling it. I feel like it was a mix, bro. I think he seemed dovish on certain things. It seemed very, very, like an optimistic outlook on how he plans to leave as Fed chair. He wants to leave the economy in good shape. Of course, the new Fed chair is going to be the big deal. That's going to be the big driving factor going forward in 2026, right? And if the new Fed chair is Hassett, then I don't know how we couldn't see the markets react bullish, So we'll just have to see once the new Fed chair is picked and takes Jerome Powell's place. That's going to be, I'm sure Jerome Powell's ready, bro. I'm sure Powell's ready, to be done with this. Russell 2000 is making all-time high. What is Russell 2000? Green Fingers, Sky Lee, Infinite Dream Lab, ATL Guy, Deadwood, all you guys, man. Appreciate you guys very much, man. Nightbot's been here, though. I don't understand that. And Nightbot's usually not in the other streams that do good, Or at least if I don't ever see Nightbot. Not saying this stream didn't do good. I'm tripping. Stream did great. I'm very grateful for all you guys, man. Infinite Dream Lab, I appreciate you subbing. Oh, my bad, man. I'm an all-in crypto guy, man. Oh man, you can tell I'm running on low sleep, bro. My brain is mush right now. I need caffeine and food in my body. This is what we need. We need a late lunch right now. A very late lunch right now. So that's what I'm going to be on my way to do, guys. I really appreciate y'all. Thank y'all again for showing up. I think the poll in the chat, Bitcoin pumps. We did pump. Do you think we continued the pump? Time will tell. We'll see in the next live stream. See you guys, man.